Good morning, everyone. Welcome today to our second Ciati wine and grape market update using the webinar format. So we had very good response from everybody when we did our first one in June. So you asked for it. Here we come again. So appreciate the support and appreciate you listening, and hopefully there's some useful information for you and your business as we work through some challenging times. But we have an excellent group of speakers today, and I think you're going to enjoy that. Some different speakers too, to give you some different perspectives of what's going on in the US market, but also in the world market, which we also cover. First, harvest is upon us, and I know everybody's very busy. So if you are out there working, thank you for taking the time to listen to us. We want to just wish you a successful and safe 2020 harvest. The most important thing I think going on is success and safety for you and your family. So today we're going to have three speakers, as I talked about. We'll cover the California wine and grape market. We'll talk a little bit about sales in Europe and the UK and what's going on in those markets to give you kind of a perspective of other parts of the world. And then we're going to have our keynote talking about consumer sales and consumer reaction in the US market, given all that's going on with the current pandemic. We're going to hold questions until the end, but on the bottom you'll see there's a Q&A. You can click on that and you can add your questions. So during a presentation, don't wait, but just go ahead and add your questions there. And then we'll try to go through and grab those in the last 10 minutes, and we'll try to go through some of your questions. If we don't get a chance to answer them today during the presentation, then post-presentation, we'll get back to you with an email, or at least get back to you to try to answer your questions. So give us questions and we'll follow up either live or post-presentation. So our first presenter, I get the honor of introducing just a wonderful guy, but we've got Johnny Leonardo. Johnny's been with Ciati since 2004, and he runs our Lodi office, works on grapes and bulk wine, and he today is going to talk about the wine and grape market here in California. Thank you, Johnny.
Thanks, Glenn. Hi, I'm Johnny Leonardo. I'm a grape and bulk wine broker with the Ciati company, and I'm going to give you a brief update on the current California bulk wine and grape market. As soon as I get my slides up here. Okay. I apologize for that. Let's see, here we go. Okay. A little rough start, but that's okay. Now with all the closures and restrictions as a result of the current COVID situation, it's hard to imagine a sales increase in activity of any kind, but that's exactly what we've seen for the most part in the California bulk wine market. Bulk market activity has actually picked up since March. Traditionally, this time of year, the bulk wine buyers tend to be looking for cheaper deals, as wineries tend to want to empty tanks and prepare for the upcoming harvest. But what we've seen is more buyers with a specific purpose, and that purpose has been to replenish supply due to increased sales in the off-premise market. We've also seen large wineries becoming buyers again. Pre-pandemic, many large wineries were actually sellers of bulk wine. Then they moved to non-selling and actually pulling inventory back to now becoming buyers, and in some cases, a very large volume. Bulk pricing trends vary. There's a strengthening in the value wines. These are wines sourced for California appellation brands, mostly the interior like Lodi or the Valley, but also coastal wines that have come down in price. Price decrease in some premium wines. Some high-end wines have softened. The prices have softened. These are mostly coastal wines that heavily rely on tasting room and on-premise sales, which have obviously had closure issues. The mainstays are in demand. Varietals such as Cabernet, Pinot Noir, Chardonnay. Cabernet by far has been the most active in terms of volume. Pinot Noir and Chardonnay market has been slightly slower, but somewhat steady, at least on the more value end, lower price point. Also in demand has been Muscat, Pinot Grigio, and Sauvignon Blanc. Muscat and Pinot Grigio, according to our inventories, is very low, very tight, very difficult to find. And Sauvignon Blanc in the valley or interior is also very hard to find. There's still some available on the coast, but overall, very good demand. We see two very different markets. First, we have the value end and mid-priced wines, which are sourced for well-positioned off-premise brands. That activity has been strong both in bulk and in the grape market. That is what's feeding these brands as a source of bulk wine or grapes. On the premium end wine side, these are sourced for smaller brands that rely on tasting rooms and on-premise. And again, we've seen limited activity there in the bulk and grape market feeding these brands. As a result, wineries have revised forecasts and are rethinking supply strategies as a result. This first graph reflects bulk wine that the Ciotti company has available through clients. It's a snapshot of each month in 2020. The total gallons are on the left of each varietal. Those varietals that I've selected are basically the 5 main varietals in terms of volume, and that's Cabernet, Chardonnay, Merlot, Pinot Noir, and Zinfandel. Right off the bat, you can see that tall blue bar that represents Cabernet, and each month a snapshot of what our inventory showed. You can see how dramatic the cab supply has been, both in terms of total volume and in relation to the other varietals. If you look back in May, our inventory of Cabernet, and this is multiple vintages, all appellations, our total gallons available was over 10.25 million gallons. Fast forward to August, and we've now cut that down to 5.5 million gallons. Most of this was from the value segment. Again, the valley interior regions such as Lodi and some coastal wines that have reduced their price. If you look at Merlot, which is the yellow bar, it's actually surprising, the movement there as well. If you go back to May, we showed 4 million gallons available, and now that has cut down to below 1.5 million gallons. Again, Pinot Noir and Chardonnay also, as you notice the graph, has been in steady demand, again, mainly at the lower price points. This next graph shows our position with these same 5 varietals in August 2020 as we now sit versus this point last year in August 2019. First thing to realize that in 2019, this was coming off a very large 2018 harvest and a very inactive market. The 2018 wines sat for months without any movement. This, of course, doesn't reflect various movements in inventory, such as sales and then new inventory lots that come onto the market. But what it does indicate is that the industry is beginning the 2020 harvest with less overall bulk wine inventory than a year ago. The California grape market. There's more available grapes as wineries have given notice on long-term contracts. For the last 3 years or so, wineries have been canceling long-term contracts, and as a result, we started 2020 with more available grapes on the spot market than we've seen in recent years. The grape purchase activity has been mixed. Again, there's been 2 completely different markets. The brands that are growing off-premise or that have been growing off-premise are largely sourced from the interior and the Central Valley. Here, there's been early selective buying, which became more active as we stand today. There was an an inevitable need for large wineries to reload after so many canceled contracts. But with the growing brands, that buying has intensified. In the coastal regions, there's been limited buying. There's certainly value buyers looking for opportunities, but the regular traditional buyers are still waiting. And in some cases, the buyers have become sellers. We've seen smaller deals of high quality Pinot Noir and Cabernet, but those deals are very limited. We do expect large wineries to look to buy at a reduced price in the future. So far, the crop size appears to be lighter or slightly lighter. Of course, it's early right now. What's really coming into the wineries is sparkling wines and early lighter crop whites, Chardonnay, for instance, Sauvignon Blanc. So it's a little deceiving because the first crops that start becoming into the winery usually are the lightest. But so far, it does look like a lighter crop. Uncertain future needs has been the biggest issue of buyers. Wineries are trying to understand what the new normal is. Of course, we have no idea what the off-premise surge is going to look like here in 2 months, 3 months, 6 months down the road, and we don't have an idea of exactly when on-premise will fully open and what the response to that on-premise opening will be. There still are a significant amount of grapes available, mostly on the coastal regions, are a few in the interior regions as well. Some final thoughts. The COVID market effects are benefiting some and challenging others. Again, it's really a handful of wineries with brands that are well leveraged in the off-premise market. They've had strong sales, while some small wineries have struggled and are struggling to find a plan of attack. New winery and field guidelines present challenges. Of course, the new COVID protocol for both in the field and in the winery could cause a slowdown. We've already seen it a little bit. This could create additional challenges for the wineries. Other observations that we've seen quite a few delayed payments or cash flow issues. And really, these are wineries that are kind of looking for financial help from their supply partners. And they're doing so by maybe going in and doing some contract price and payment term renegotiations. This is with both existing contracts and future contracts as well. There's been some financial tightening, which this has resulted in changes to supply strategies and buying. There could be more opportunities as harvest progresses. Again, in many areas, particularly on the coast, there will be grapes available at reduced pricing. We anticipate wineries going in and potentially taking advantage of that and buying some grapes. There also could be some opportunities in the interior with lesser in-demand varieties such as Zinfandel. Kind of on the last note here, our advice really is to be willing to be creative with deals and get through in the short term. Our advice is certainly to be open to options with perhaps payment terms. We've seen some of that going on again. Maybe consider extended terms or multiple payments or temporary storage even for bulk wine. Those are areas that may have to be explored in order to move some wine. So with that, I thank you. And as Glenn said earlier, good luck with harvest.
Thank you, Johnny. Appreciate it. Great update. So thank you very much. We're going to move on to our next presenter, and it's we're in a different time zone. So we have Vic Gentis, who's been with the Ciotti company since 2005. Vic is directed at times our South African operation, where he currently is, and then directed our European operation. Now Vic's back in South Africa, but he's been very involved in working with a number of the European buyers that our company works with, and it's what is it, about a little after 8 o'clock there, Vic. So that's water, I think. But Vic will give us his take on what's happening in the European and UK markets. So thank you very much, Vic.
Thank you, Glenn. And hello, everyone from a very cold and wet South Africa. Let me just share my slides. So I'm going to give you an overview of the UK market and Netherlands and then Germany. So to start with the UK, general overview for the last year till 31 March this year, sales volume decreased by 1.4%, sales value increased by 1.1%, and that was, the steady increase was driven mostly by price increase per litre. For the first quarter of this year, beer, wine and spirits grew by 4.7% in volume and 6.5% in value. Beer mainly drove that growth, but wine and spirits drove the value growth. Value growth on wine was 7.5% up against the same 3 months last year. What's important to note is that only wines priced £5 and up per bottle showed both volume and value growth in the 12-month period until end of March. But for the first quarter of this year, also till the end of March, that trend shifted from £5 a bottle up to £6 a bottle. So people were actually buying up. Most important varietals, Malbec is the fastest growing varietal in value, up 25%. Sauvignon Blanc, though, added the most value of £21 million to the wine category growth over the 3 months. Most important countries of origin, France and New Zealand added the most wine growth, but Argentina saw the fastest value growth with 20%, mainly in Malbec. On-trade in the UK represents 46% of the UK's annual liquor spend, and it's most likely higher than any European country. And we'll see just now when I do Netherlands and Germany why I say that. Brexit was thought to be the big unknown factor in all the UK industries, but the COVID-19 closure of the UK hospitality industry for 17 weeks caused that sales value in the on-trade fell in the second quarter by 87%, or a whopping £30 billion loss. On the positive side, just 2 weeks after the on-trade opened again in mid-July, it was almost back up to 70% of pre-lockdown norms. But despite the positive signs, a survey by the UK Hospitality and Data Analyst CGA found that over 75% of restaurants, pubs and bars might not be able to pay their bills over the next 12 months, and that 20% of them are at pretty serious risk of bankruptcy. The off-trade, alcohol sales through grocers and supermarkets during the off-trade lockdown were up for the months of March through May and into the mid-June. This year, March 22%, April 27%, May 50%, and an overlap with May in the 4 weeks up to 14 June, 43%. Online sales were up 91%, totaling 5.7 million online shoppers. That means that 1 in every 5 households in the UK did online shopping in the 17 weeks of lockdown. Retailer Majestic Wine reported they gained 150,000 new online clients, a growth of over 300%, a 7% increase in mobile shopping, and an 11% increase in the average bottle price. Again, confirmation that consumers are buying up. Still in the off-trade, consumers spent £7.7 billion on alcohol in UK supermarkets during the on-trade lockdown, which is £1.9 billion increase compared to the same period in 2019. However, against the on-trade loss of £30 billion, the additional £1.9 billion gained in off-trade wasn't really what we expected if you looked at the percentages. Volume at different price points, and here I come back to what I said about the £5 plus and the £6 plus. The left-hand side of the graph shows the last 12 months until the end of March. The right hand shows the first 12 weeks of the year, also till the end of March. It says last 12 weeks, but it's actually the first quarter. You can see on the left-hand side for the last 12 months, there was still growth in the £5 to £6 category, although it was only 1%. And then from £6 on, 10%, 13%, etc. On this side, £5 to £6, there was already a loss. And suddenly a 19% gain, £6 and up, etc. Most important countries of origin for the UK trade, wine trade. Over the last 12 months, wines from Chile, New Zealand, and Argentina enjoyed the strongest growth. France showed a modest growth. Australian wines are still the most popular. Germany and South Africa saw the largest value losses. And South Africa, the reason for that was in 2018, 2019, they had a general price increase of 30 to 35% on bulk wine. So they lost market share. Netherlands, the Dutch wine culture with a population of 17 million. The Dutch are starting to drink less. They're looking for better quality. They're mindful about their health and their environment. The Dutch wine market the last 2 years, volume is steadily declining, value is stable, consumers are buying up. So we're seeing exactly the same trends as in the UK. Consumption trends and countries of origin. Consumers are buying less wine and they're drinking more gin and beer, which could be caused by the hotter summers and the changing climates. Top countries of origin for Netherlands: France, South Africa, Chile, Spain, Italy. Again, South Africa lost volume due to the heavy price increases and also because this year we had a total alcohol ban, including a ban on exports for the whole of April and a few weeks into May due to the COVID-19 lockdown. Country of origin awareness and consumption for Netherlands. This is quite an interesting graph. France, South Africa, and Chile are the best at converting consumer awareness for their wines into purchases. Those first two countries are favorite holiday destinations, but not so Chile. What I see here is a possible opportunity for California. If I compare it to Chile, and I've purposefully left France and South Africa out of this, Chile has a 69% awareness that they produce wine amongst consumers, and 36% of consumers buy wine. For California, there's a 54% awareness and only 8% buy wine. I see that as quite an opportunity for California. Varietal consumption: over 50% of Dutch wine consumers drink Chardonnay, Sauvignon Blanc, and Merlot regularly. Again, the New World or international wine varietals. Malbec is up 90% against the 2014 base, which was small, but still you can see what can be done against a small base. Opportunity varietals for countries to turn awareness into sales. Again, Merlot, Pinot Noir, Chardonnay, Sauvignon Blanc. The on and off trade in the Netherlands. On trade is approximately 32%, off trade is about 68%. But important to note, this is beverages and food. And from what I've analyzed, I actually see that on the real on-trade just for liquor is about 20% and off-trade 80%. And the reason why I say that is if you go to the next slide, the off-trade channels, 85% of regular Dutch wine drinkers purchase wines from supermarkets. And of the 85%, 50% of these same consumers buy their wines from just two supermarkets, Albert Heijn and Gal en Gal. Top brands. I'm not listing these brands to actually talk about the brands themselves, but this ties in with the previous slide of supermarkets and supermarkets' own brands. There the supermarkets' own brands are highlighted, but Aldi owns the brand Kaapsezicht and Ahold or Albert Heijn owns Mooikarp. So you've got three supermarket-owned categories or brands listed among the top 15. Off-trade spend on wine by occasion. You can see that for the wines bought in the off-trade, for every occasion, the trend from 2014 to 2015 is up in price. And the same for on-trade, obviously just at higher pricing per bottle. But again, for every occasion, the pricing is up. So again, consumers are buying up in the Netherlands as well. Germany, general overview, and I only had figures. This is a report that came out in July this year, figures that I could get from 2013 to 2018. Wine imports decreased by 4% over the 5 years. Population increased by 2.5% or 2 million. Consumption for both German and imported wines decreased by 4.5%. Wine channels, on-trade, off-trade, virtually the same as what I said in Netherlands. On-trade represents 20%, off-trade represents 80% of total wine sales. Retail supermarkets are the most important channel of the 80%, representing 78% of the 80%. And of that, discounters or discount supermarkets are 50%, classic supermarkets 17%, hypermarkets 11%. So you can see how small the on-trade is. Household spend on alcoholic beverages in Germany in percentages, the highest household spend is still on wine, well above 30%. But over the 5 years and into 2020 where we are now, it's unfortunately steadily decreasing. Beer is increasing in its shared spend. Once again, could be the influence of warmer weather patterns. Spirit, sparkling wine, and others stay relatively steady. Household spend on wine by country of origin. The spend on German wines, in the orange there, is by far the highest, but again, it's going down. The spend on France is going down. Spend on Italy went up. Good news for Spain and the New World countries. They've been constant over the whole 5 years represented here. Bulk imports by varietal and country. White wine represents 40% of all bulk imports. Red represents 60%. Of the white, Chenin Blanc, mostly from South Africa, 5%, Sauvignon Blanc, 7%, Chardonnay, 23%. Red, the rosés, and I've put generic and varietals together, 6%. Generic red, 6%. Merlot, 10%. Cab Sauvignon, 20%. Shiraz, Ruby Cab, Red Zinfandel, each 5%. The most important countries. Chile is number 1 at 37% of all German imports, almost double most of the other countries except Australia, who is in second place at 22%. These two countries, importantly, dominate with Sauvignon Blanc, Chardonnay, Merlot, Cab Sauv, and Shiraz. If you add the highlights up at the top, it's 60% of all imports, just these two countries. Chile's additional advantage, there's no import duty on Chilean wines imported into any EU country. So it's not just all about price. They've got that advantage as well. California and South Africa are both at 18% of imports, and all other countries are in single-digit numbers. Once again, an opportunity that I see for New World countries like USA, Argentina, and South Africa is to gain market share on the Chardonnay, Sauvignon Blanc, Merlot, Cab Sauv, and Shiraz markets. In other words, the 60% that's dominated by Australia and Chile. To summarize, for all three countries, wine consumption, therefore volume, has shown a steady declining trend in all three of these markets over the last 4 to 5, 6 years. Value, though, is very slowly but steadily increasing through consumers preferring better quality and buying up, even now despite the current adverse economic conditions now during COVID-19. Online sales is becoming a separate important growing market, and it's not yet matured, so there should potentially still be quite a lot of scope for growth. And as things stand now, there are still opportunities for countries, especially New World countries, to grow their international bulk varieties in some of these market segments. And that's it. Thank you very much.
Thank you, Vic. Excellent job. Appreciate it. Thanks for all the input on what's happening in other parts of the world, which is really important to understand and know, especially some of those potential growth opportunities if you happen to be sitting in California. I want to introduce our next speaker, Danny Brager, Beverage Alcohol Consulting. Danny was formerly at the Nielsen Company. He was a senior vice president of the beverage alcohol practice. He was there for almost 20 years and talking and sharing information regarding business information, analysis, and insights about the market. So I know many of you heard Danny over the years. That sounds like a long time, but he's not old. But at his presentations, and they're all so enlightening and educational. And given as we go through this time of COVID and pandemic, and consumers are reacting in different ways, we thought it'd be great to hear Danny and some of his insight in where the market sits today. So thank you so much, Danny.
Thank you very much. Thanks. I had to laugh about your age comment, Glenn. I appreciate that. So I am going to talk mainly from a consumer perspective about the U.S. wine market. And I thought, we'd start off with a bit of a reminder as to where we were coming into 2020. We were at a point, if you look at the top left-hand side, and that's annual wine case sales, where the market, frankly, was flattening out to the point where there was very little growth overall. And there were some kind of dire headlines on the bottom left-hand side that were in the news towards that end of 2019, the beginning of 2020. And given that wine does not operate in a vacuum and competes against beer and spirits, and frankly, most drinkers don't just drink one category, they drink across categories. We have to recognize that we have competitors, and frankly, if you look at the green line, which is spirits, they had continued to grow share, increasingly so into the end of 2019. Beer had lost share, and wine had been generally growing share, but towards, again, 2019, it was the first year in a very, very long period of time that our share had flattened. In fact, it lost just a little bit. So coming into 2020, my comment on 2020 is probably like most of you, I wish 2020 didn't happen. And I hope that we can get into 2021 in a safe manner as quickly as possible. But we have to recognize kind of where we are and have to deal with the current situation. So the world as we know it today, obviously safety is a number one consideration, the health and hygiene across whatever class of trade and for consumers. We're seeing a massive shifting of where from on to off premise with a greater homebody economy, less on the premises dining and drinking to more delivery and takeout. And I think Vic had mentioned this, and we'll certainly see it, that there's just a massive explosion of e-commerce and all things digital. Consumers are acting and reacting differently. There are different kinds of consumers. Some are constrained economically, some are more insulated, some are younger, some are older. Depends on where they live in terms of the impacts on them. And frankly, everyone reacts individually and potentially differently. So understanding as a brand owner who the consumer is, who your consumer is extremely important. There is trading up that we're seeing in the more traditional off-premise, this kind of retail stores, but in highly premium channels, like some of the direct-to-consumer shipments now, we're actually seeing the average price coming down as suppliers need to move their inventory. And then when you think about the fact that someone who might have spent, saying $60 for a bottle of wine in a restaurant is now paying $20 if they buy that same bottle in a store, for those consumers, they are trading down in their spending. So there's the whole aspect of premiumization or trading up is much more muddy and nuanced now than it was before. The impact is extremely uneven across the industry, so I'm going to show you total industry numbers, but I recognize that suppliers and participants in the industry are impacted differently depending on whether they're big or small, whether their balance is more off-premise or on-premise, whether it's more three-tier or more direct-to-consumer. It all makes a huge difference in terms of that individual company performance. And then I get asked about, is overall consumption up or down? I believe that overall beverage alcohol consumption is pretty flat. It always has been during past recessions, or when things were good, people still drank roughly the same. They may trade up, they may switch across channels, they may switch from beer to wine to spirits, or in different orders, and they'll switch within. But in total, overall per capita volume consumption is pretty flat. Beer share losses are accelerating. Spirits is still growing the best, and I believe wine is growing in volume, but likely only a little. And I say that because if we look at the long period of time, and this is, if you just look at the height of the bars, this represents per capita volume consumption across beer, wine, spirits, including cider. You can see that the height of the bar hasn't really changed over years. Even good times, bad times, that overall volume per capita has been roughly consistent. So there's a pretty slow and predictable change in total demand over time. And beverage alcohol does a very good job, in my opinion, of catering to basic consumer needs that still remain, and sometimes even more so, or sometimes even less, sometimes a little less so, but overall there's still that same need and desire, whether it be for relaxation, for a treat, or for connections, albeit today in a socially distanced and safe manner. A couple things. I'm going to show you some data from Nielsen. We're going to send out these charts after, so don't worry if you miss some data points. But when I look at the Nielsen measurement, I'm primarily going to be looking at the off-premise, and we're measuring retail sales to consumers. So this is not shipments, it's not depletions, it's what consumers are buying. We report that week by week, and I think it's really important to look at the more recent changes to see how or if consumers are changing their behavior from even the beginning of the pandemic. And you can see what's included on the right-hand side in terms of the different channels that we represent. We also partner with CGA. Vic mentioned CGA, so we have a partnership called Nielsen CGA for the on-premise, and I'll show you a couple of slides from the on-premise as well. If you do all the calculations based on the importance of on versus off, which is about 20% on-premise volume importance, 80% off-premise, and knowing that on-premise is obviously way down, given the shutdowns and even the slower, even a reopening, but still a slow reopening. Off-premise volume would initially have needed to grow in the low 20% range for the total category to get back to flat, just to get back to flat. And now with some reopenings, that growth rate needed to get back to flat has dropped a little bit, but it would still be in the high teens. And then if you're looking at how does an individual segment or a brand or a company to grow share, that means that segment or brand or company has to grow above that level. So we have to see huge growth for those segments to actually grow share. We'll look at a couple different time frames, pre-COVID time frames through the end of February, COVID year to date, which is the beginning of March through now, the week ending August 1st, so it's 22 weeks in total. And then we've broken that down in some instances to the first 3 months, called the restricted living period, to the reopening period from the beginning of June through now the end of July. And here's what that looks like. So here we're looking at dollar growth rate on a week-to-week basis for spirits versus, and all these are versus a year ago. So spirits in green, wine in red, beer in gold. So if you just look at those lines, spirits has done the best job of growing versus a year ago, and this is in the Nielsen measured off-premise. Wine is kind of in the middle, and beer, which includes this category called hard seltzers that I'll show in a minute, is growing the least. At the same time, if you go to the top right-hand side, value or dollars is growing faster than volume. So consumers in this channel, at least, are trading up across all the 3 different beverage alcohol categories. But if you look at wine, I mentioned that 20% level. So over the entire time frame, wine has maintained its growth rate above 20% just to get back to that flat level. And we'll come back to that in a minute. I mentioned wine has grown in excess of that 20% level on a year-to-date COVID basis. So that's the beginning of March through the end of August. You see that 21.1% level. But if you break it down into the 2 different periods, as the country is reopened in fits and starts, admittedly across the country, and consumers have adjusted their purchasing behavior, you can see the deceleration in growth into the reopening period from the beginning of June through the end of July. And what does concern me a little bit for wine is the deceleration has been pretty strong, stronger than the reduction in growth for beer or the reduction in growth for spirits. And that 12.9 wouldn't get us back to a flat position given the on-premise declines. So I think we've got to watch that. It's concerning to me a little bit. And you know, it could mean that we're heading to, again, wine being just flat or maybe potentially even down if that growth rate doesn't tick up a bit more. So I mentioned on the beer side, that includes this category called hard seltzers, and I realize you're not into likely the hard seltzer category, but it does compete with other beverage alcohol categories, and it is a phenomenon unto itself. So this represents weekly dollar numbers for hard seltzer in blue for the most current set of 52 weeks up through the beginning of July. And the purple line represents what those dollar numbers were a year ago, green is 2 years ago, etc. But hard seltzers are now over $3 billion annually. That's huge, $3 billion. It represents over 10% of beer. That $3 billion is bigger than sparkling wine. It's total. It's bigger than, if I add up Italy, Australia, and France all together in the off-premise, it's bigger than that. So it's just a huge growth driver. It is bringing new consumers into beverage alcohol, not just into beer. And it's bringing buyers in that frankly could be a good thing, especially if they're younger drinkers and they get accustomed to drinking alcohol and convert to a wine drinker as well. But it has siphoned off some growth from not only other beer segments, more mainstream beer segments, but also from the wine category. And in reaction to that, we've definitely seen some wine and spirit companies launch their own hard seltzer type products, but with a spirits and or wine base that represents an additional almost 200 million today and is double where it was a year ago. So just a key thing to watch that's really fast evolving. In the spirits category, I'm not going to spend a lot of time on this, but first of all, the way you would look at this is the gray is the growth rates for up through the end of February. Then the light green is the restricted living period, the first 3 months since the beginning of March, and then the reopening period is the last 2 months. So you can just see some of the categories really driving growth, in particular ready to drink, and a large part of that are in cans. Then tequila, which has maintained not only good growth before COVID, but since COVID, it's just continued to be on fire. And then you can see some of the other categories. Again, I'm not going to spend a lot of time on that because I want to talk about wine. So on the left-hand side for wine, we're looking at the growth rates for the on-premise. So you can see the huge declines. And then on the right-hand side are the volume growth rates that I had mentioned before for wine in the total COVID, that's 22 weeks, and then the restricted living versus the reopening period. And again, keep in mind that we need to grow in that high teens up to a little over 20% to get back to flat, which we're falling a little bit behind in the reopening period. So let's look at what we're seeing, and I'm going to flash through these pretty quickly. We're looking in general the same kind of charts where we're looking at the restricted living period of growth and then the reopening period. And I think Vic mentioned this, I think Johnny might have mentioned as well, in the retail off-premise, we are seeing consumers who are trading up. So you can see where the growth is coming from. It's toward the right-hand side of this slide. But keep in mind again that some of these consumers might have spent $60 or $80 for a bottle in a restaurant that are now spending $20 and maybe gladly spending $20 because they're saving a lot of money when they buy that same product in the off-premise. And at least for consumers who aren't economically burdened, they may have even more money to spend given that some of the money that they might have spent on restaurants or travel or entertainment or so on isn't available to them. If we look at by package type, and I organize this by the biggest packs type, which is obviously the 750 ml bottle, all the way to the right-hand side. In the beginning, there was this huge rush to buy large sizes. So you saw huge increases in, say, 3-liter box, even a 5-liter box. That's come down as consumers have gotten kind of more used to more normal patterns of purchase behavior. And now we're seeing cans, back in the kind of high growth as before, but still a small part of the market, as well as the 375 ml, so the half size. And I think to me, it says that there is a lot of consumer interest in package formats that provide a smaller serving size than just the traditional 750 ml. By country, I've organized this by the countries growing the fastest. So these are by origin. So that starts with Italy, growing the fastest, then New Zealand, obviously heavily Sauvignon Blanc. This is just table wine, doesn't include sparkling, which I'll show in a second. But you can see some countries of origin: Italy, New Zealand, Portugal, on the port wines. Oregon is the first sort of domestic origin, and then we get France, et cetera, et cetera. By varietal, so in this case, I'm looking at the entire 22 weeks since the beginning of March through the end of July. So that starts off with Sauvignon Blanc. And the one thing I would add here is that while New Zealand Sauvignon Blanc had been outgrowing US Sauvignon Blanc for the last number of years that I can remember, since the beginning of March, actually the US Sauvignon Blanc has done quite well and is matching the growth rates of New Zealand Sauvignon Blanc. Then we see red blends, Pinot Noir, sparkling. Then I think it's interesting, a couple of more sweeter varietals like Moscato and Riesling that weren't performing terribly well up through the end of February have seen a growth resurgence. So they've kind of turned things around. But that's through the entire COVID period. If we again break it down into the first 3 months versus the last 2 months, the Moscato growth rates and Riesling have come way down. So what is leading the way is sparkling. Maybe consumers have now, if they can't celebrate while they're out, they're going to celebrate somewhere, even if it's around the home. So it's done very well. And then we get Sauvignon Blanc still chugging along, red blends, Pinot Noir, and you can see Cab. E-commerce is a big deal. In this case, we're looking at total e-commerce for total alcohol. The red line represents the number of buyers week by week. The blue line represents the dollars they're spending on alcohol. And then we broke out wine versus spirits versus beer on the left-hand side. E-commerce can mean a lot of different things. So in this case, we're including all types of e-commerce. That could be three-tier e-commerce, a pure play retailer like a wine.com or an Amazon, or it could be a legacy retailer that has an online portal like bevmo.com or walmart.com or kroger.com, or it could be a marketplace or a platform like an Instacart or a Drizzly or Vivino. And in here, it could also include direct to consumer where consumers are buying online. So huge growth. It's on a low base. There's still lots of potential. The spirit guys know it too. So you can see while wine dominates from a share perspective, 2/3 of all the online activity, spirits is actually growing the fastest. So that's a good segue into the direct to consumer portion. So we have a partnership with Ship Compliant and Wines Vines Analytics for the direct-to-consumer wine shipment. So this is not in the tasting room, or it's not tasting room carryouts. It's what's being shipped to consumers directly. About $3.5 billion annually. Growth rates had been declining up through the end of January and February, but then with the shuttering of tasting rooms, you can see the huge growth rate during the last 4 months, March, April, May, June, 2020 versus a year ago. The one difference being that volume is growing faster than value, so the average price is coming down. Here we're looking at shipments by price tier. So the black bars represent share of each of those price tiers on a volume basis. The red line represents the percent change versus a year ago. And you can see the pattern that the lower the price, the higher the growth, the higher the price. When you get into 100 plus, we're seeing decreases in consumers buying at those higher price points. And that could be because the consumers coming into this market aren't used to paying the higher prices. And it could also represent, I'm sure it does, suppliers doing what they need to do just to move inventory. So that's on volume. These are the same numbers on dollars. So if we look at dollar share, that's the black bar. We get much more into the sort of 30 plus, but again, the same pattern of growth. By origin, so origin dollar growth, we're breaking out total California, then Napa, Sonoma, Central Coast, remaining California, wines from Washington, Oregon, and then remaining US. So dollar growth again, or growth in DTC shipments is strong overall, except that Napa is only up single digits where everything else is up double digits. So that's on dollars. You can see Napa less than, the scale is on the right-hand side, less than about 6%. On volume, Napa does much better because prices are coming down for Napa wines. So on volume, we're seeing Napa and everything else with double-digit growth rates right across the board. But again, in Napa, prices are coming down. So here, the black bar represents the average price for a bottle of wine. So in Napa, during the last 4 months, between $50 and $60, but that's around $10 less than what it was a year ago during the same 4 months. Whereas in all the other origins, both in California, in Washington, Oregon, and then other parts of the US, the average price is either come down just a little, nothing like Napa, or has in a couple of cases, Washington, Oregon has actually gone up just a little bit. I'm going to skip a couple things. I want to make sure there's time for questions. There's a couple slides in here about restaurants that I think are interesting in terms of
Hi, I'm going to jump in here for a second. I think Danny froze on his presentation. So let's do this. We're at 11:51, and I know Danny was going to wrap up with a few of his slides. Let's try to see if he comes back on, or then we can go just to question and answer. Let's give it 15, 20 seconds and see what happens. And we do have some questions coming in, so we'll try to get to those too as we go through this. But one of the unique things about webinars is you got to be prepared for everything, because there's internet connections, and it's an interesting new world that we do live in. So why don't we do this? Let's go ahead and try to bring our other panelists back on. Oh, there's Danny right there. He's
Hey.
Do you want to get a couple of comments in?
Yeah, you know, I was actually on my, if you can hear me, I was actually on my
Yeah.
last slide. So why don't here's a couple thoughts that I have.
Yeah.
If you give me 1 minute. So first of all, I do think that economically, the true economic fallout may still be ahead of us. I mean, it depends. As Vic said, it's hard to predict the future, but, you know, and if that happens, then growth could accelerate at the bottom end, because it's not right now, but it could from a consumer's perspective if they just can't afford some of what they were affording before. But we are seeing today that consumers are trading up in the mainstream off-premise, but down in the direct-to-consumer and in the on-premise side of things. For the foreseeable future, the opportunities are going to be in the retail off-premise, whether that's brick and mortar or whether it's online. And, you know, it would be advantageous if people, you know, understand that and really pay attention to the e-commerce space, because clearly that's a big opportunity for the foreseeable future. On-premise is very fragile. There's going to be a lot of locations that just aren't going to make it. Even if they open, if consumers don't come, then that doesn't, you know, that's not going to make it. There will be opportunities for more delivery, including alcohol to go. Assortment and menus are likely to shrink, so it's just going to be tougher to get, you know, products on menus, because if anything, it's going to be more constrained, not freer, and pricing may need to adjust. And then I think it's just really important to understand your consumer. You know, are they constrained? Are they insulated? The wine consumer tends to be more higher income, so probably more insulated, which is a good thing. But still, we've got to watch that. And then there's going to be, remember what I said, and I truly believe that total alcohol consumption isn't going to change all that much, which says to me it's a battle for share. It's a battle for share between beer, wine, spirits. It's a battle for share within the wine category. And look at things as granularly as you can, whether that's by geography or whether you look at timelines. Like looking at 6 months doesn't tell you what's happened in the last 2 months or the last month or in the last week, because things are changing. Be flexible and be nimble, because there's going to be twists and turns ahead. So thanks for bearing with my technical glitch. I have no idea what happened, but thank you very much, and I appreciate the time.
No, that's good. Thank you so much, Danny. This is, like I said, this is a new world, and we're learning to swim. So thank you so much for your presentation and comments, and we'll bring everybody back on. We can do some Q&A. I will say, and we'll try to end it fast, so we'll just grab a couple questions. We'll try to get back to you on the ones we don't answer. We've had a lot of requests for, hey, are all those slides going to be available? So everybody that was a registered attendee, we'll send out slides, so the decks, and you'll also send out a recording of the webinar. So we'll do a follow-up with that. So yes, Danny's slides will be available. I think that was the one of the questions we're getting. Just a couple questions here. We got 5 minutes or so. Johnny, we had a question, maybe if you want to talk about it, or we can throw it out, but one of the questions was if you could speak about whether or not California's coastal areas and premium end producers may find themselves more badly hurt by the pandemic. Will we see a substantial decline in dollars per tons as grapes remain available and contracts are ended or renegotiated? And I think this is kind of looking at the coast and what potentially is going to happen on the coast as we look at the rest of the year in the grape market.
Yeah, it's difficult to to speak about what happens to the financial positions of wineries, because there's a lot of variables, obviously. I think it is safe to say that price on grapes will come down and has come down on the coast. And I think, it seems to be price comes down in the valley, it tends to be a little easier to sustain when it's $100 a ton or something of that nature, and prices are actually increasing in the valley. But the coast, when the prices come down there, they come down much more drastically, and I think that's a challenge for growers as they have budgeted for, in some cases twice as much as what they're being offered. And Glenn, I'm sure you could probably speak much better on the coast than I can.
No, but I think you're looking at the right way. The expectations is buyers that will come into the coastal markets are going to be looking to add to some of their valley supply needs, right? Given the valley's relatively tight, and it'll probably remaining grape activity on the coast is going to be closer to valley pricing than some of the premium pricing, the coastal areas have been more used to over the near term. So I think that's potentially what's going to happen. There's still, we'll have to see. Like I said, we're just starting. I had a question here for Danny. It says, how is the consumer demographic, more younger legal drinkers, retiring baby boomers, impacting wine demand?
Well, I think some things haven't changed, and the things that haven't changed are that the wine category still has challenges in terms of converting younger drinkers to be wine drinkers, or should I say regular wine drinkers, because they do drink wine, but not regular. And frankly, things like hard seltzers and some of these things are making the challenge more difficult, because those kinds of categories and some of the spirit categories, in my opinion, again, are doing quite a good job of catching those new consumers coming into legal drinking age, maybe better than wine. And then at the other end, boomers and say the boomer generation, which is kind of still the core wine drinking generation. Let's face it, we're all getting older, right? And over time, as we age, while you and I, Glenn, are probably going to drink the same amount of wine, not everybody will.
Yeah.
So we've got challenges, I think both at the younger end and then at the higher end. So I keep saying, how do we create the right on-ramps to drink wine, and how do we extend the off-ramps?
Yeah, and I think the other question too is how does what's happening today affect consumer behaviors even when we do get through this pandemic? I mean, it's tough questions to answer, but I mean, I think like you said, you got to adapt and be listening to your consumer so you can be competitive in those markets. So, which was, I think, right on. And then, Vic, question that we got a few questions, but one was just more, and I don't know if you want to cover it, and maybe Danny could jump in too, but just on U.S. sales and tariffs. So, we talked about, you saw some opportunities in certain countries with, maybe U.S. or New World being more active. Has some of the recent talk about the tariffs and especially on wine and us exporting wine affected U.S. sales? How do you look at those tariffs and how we're positioned from U.S. selling into those countries?
Yeah, Glenn, I think it's a combination of U.S. tariffs and probably the outcome of Brexit. I've heard that the Brexit duty structure has just come out recently, I think last week or the week before. I'm not quite sure when. I received an email in the last couple of days, but I haven't had a look at that yet. And that's also why I put those last couple of words in my conclusion where I said, as things stand now, because
right, no, it's up in the air.
Yeah, who knows? It's very, very, very difficult to say. As I also mentioned in the one slide, if you look at Chile, it's very easy to say these are opportunities, and there are opportunities on those international varietals. But when you are competing with a country like Chile, which has got no import duty into any EU country, you have to be pretty low down on pricing, which not every country can afford. So I don't know. I've been with Ciari for 15 years, and the one thing that Joe Ciari taught me is you never make predictions. So I'm not going to
It could change tomorrow, but I think, when you look at it though, those countries that don't have the tariffs and don't have the barriers, Chile's fairly well positioned as a new world country into these European markets are taking advantage of that. It definitely weighs you down when you have that weight that you're trying to work its way through. So
it doesn't just depend on administration. It also depends on marketing and whether you're marketing, each company is marketing itself or whether the country is marketing itself as a country. And a really good example of that is if you take a couple of decades ago, Australia, there were probably only 4 or 5 really big companies exporting out of Australia. And because there were so few, they were setting the trend, they were setting the pricing. You can call it monopolizing, but at least they were standing together as a country. South Africa, unfortunately, I've got to take our own country as the other side of that. We had like 50 cooperative and probably another 200 private estates all competing for the same market once our export market opened up. And it's just a people kill each other to just. And as one buyer said to me probably 10 years ago already, I only need to find one fish.
Okay. Our connections, we're having the normal webinar fun of connections, but I think what we'll do to stay on time is I wanted to make sure all the panelists got a question, and we will, like I said, I have some requests here. We will get video recording and the decks and slides to everybody that was an attendee. And I just want to say thanks again to all our panelists. Did a great job and appreciate your time and expertise. And thanks again to all the attendees listening. And we will try to follow up with those questions. And we just wish everybody a safe and healthy harvest. And, take care. Thank you very much.